All right, good day, everybody. It's Doug here with the LincolnList.com. This is the Stock Market Weekly Review for the 13th of July. I hope everything has gotten off to a great start for you this month. As always, if you need help with your trading, you're looking to take your game to the next level, visit the LincolnList.com, take the 14-day free trial. We'll begin talking a little bit here about the SPY. And as I said, we've really been stuck in this channel. And this week, we saw a lot of that Greece and China news really impact the market. But still, to this point, no matter what's been thrown at it, it's held at 204. So this number is now taking on a lot more importance. You see, we hit that bottom a couple of times in March. We're back here again in the summer. As long as that holds, we're probably going to see the same kind of tempo in this market. If that is to close below that, we see a little bit of selling down underneath of that, then we might start working on some of these others. The theme that I've always been saying with each and every one of these market reviews each week is until we start closing under 204 to 203, then you might be able to switch your stance a little bit more aggressive to the bearish side. Again, we saw a lot of news and a lot of things come at this market. You've got the Fed interest rate hike that's been hovering over it a while. You've got the Greece debt crisis and, of course, China's market correction as well. Still, through all of that, we've been holding that 204. Keep it there. Now, with some of this news, we might not see 212s or 213s or some new highs at some point. You know, we've been kind of festering through this area since last Thanksgiving, but at some point, one of these upper numbers will go. Either we'll see higher above 212, or we're going to go a little bit lower between 204. That remains to be seen. Rather than predict what we think might happen, we'll just let it happen and then play accordingly. So kind of keep your eyes on those numbers. I'd say 212 to the upside and 204. Pretty big range there. Again, we're stuck in that range. So we'll move on to a couple of different things like stocks, because that's what we're trading here, and we'll see what we have. A lot of these stocks here have held really well, especially the pharmaceuticals, throughout these bad news and crises that we're having. Most of the pharmaceuticals held up pretty well. I'd say most, not all of them, but most of them did. One is this EGRX, just a nice little standard pull into some of the nearer term moving averages, basing within that and now perking up. The thing I like about this chart, and I talked about it in a couple of our watch lists previously, is if you ever got back above this 8230 area, we could start to see this thing work towards some of these highs, 91.71 and so on. One of the things I do want to keep in mind here is, even though these charts look well and the pharmaceutical industry for the most part has yet to really be hit, you still have to keep your eye on that, because if some of these problems don't get resolved, or it doesn't really matter maybe sometimes what happens, it's how the market reacts to what happens, we might see lower numbers. We might see the market dive on a couple of days. We might see, as we have been seeing, a couple of 200 down days, a couple of 200 up days. You wouldn't want to get too aggressive on this on the down days, but if it's able to hold up around this area, and I'd say not going any lower than the mid 83s, there's a possibility this thing could line up for a nice run. There's a couple of things I think has to happen here. It's a day-by-day thing as far as I'm concerned, because I'm not going to sit here and predict what I think is going to happen. The chart looks nice for a breakout. There are some extenuating circumstances over top of that, but maybe, possibly, we could see something nice. EGRX, one to watch going through the week. Another nice looking chart here is this little NCLH. This thing is you know, perking nicely here right around high, and the close that we had Friday was just a few pennies above the highs here. That's going back into May. So this is a pretty important area. It'll be very interesting, at least from my view, on what this thing does first thing Monday morning. I certainly wouldn't want it here right at that resistance number, but if it is able to maybe possibly break out, pull back into that resistance number, or maybe the other trade would be as if it flushes just a little bit down into the lower 57s off of some of these VWAPs or longer term moving averages, then we might see a nice little curl and then a red to green run, and then a nice little spike. Again, it's something that you're going to have to wait till tomorrow to see how it lines up. There's a couple of different ways to trade this, but when we look at this daily chart, you're at a very, very pivotal area here. You could see a really, really nice breakout on this NCLH, so keep it up there on the watch list. Now, rare, here's a little bit more. RARE. I've talked about this stock. Those who trade with me, we trade it a lot. I'm a little bit more cut and dry on this one. This is definitely moving up the list as a short. This has been a stock that's been on fire really since May. You've gone from 60 to 116. I mean, at some point here, you are going to get a nice little pullback. And what I like about it is when we look at the daily chart, you had a really nice flag here, and then a really, really nice breakout at 106.29. So the 106.29, if you were a buyer there on that breakout, that was a legitimate chart setup. Now you just really much jumped $10 over a 2-day period of time for, and now you're just kind of, if you look at it, I wouldn't call it a great blow off top, but that's possibly what you're getting here. Once these things start to run, they'll ramp up a little bit and then they need to slow down. If this thing is gappable in the morning where you start out, I'd say 120. There's some good range in this, but if you go straight to the 120s beginning the day on Monday, I would say you have to take a short shot at that. Your risk to reward and the way this chart works and what's happening over the last few days, there's a great chance, an above average chance that that stock's going to get pulled, maybe fill in that gap and sell off. That's the trade I would be looking for here. If it gaps down or it begins the day with red, I don't think it's definitely something I wouldn't want to short. One of the things I've been talking about lately is that a lot of these stocks will flush at the beginning of the day or sell off early, only to turn around and make new highs 30 minutes later. The thing that we don't want to do still is chase into some of the reds. Now, we did see some heavy sell days where that strategy would work, but overall, that's not really what you want to be doing here as an intraday day trader. Keep your eyes on 120. I say we go straight up to 120. We gap up there, or we run there early. This will be my top short. If we flush, then it's a couple of things I'm going to have to look for. Some lower highs, a couple of pivots to actually make the trade, but rare. I'm really going to be looking at this stock for a potential short setup this week. And also the same case could be made for this TSO as well. I mean, this thing just launched from 85 to 98, and probably once it's sniffing around here, this 100, I'm going to use that just like I would use the 120 with EGRX, and I would take the very, very same approach here. You're looking at a stock that's had a strong week, probably a little bit longer than that, and it's due for a small pullback in it or a resting zone, and this is where you could take advantage of that price and fluctuation here. Same thing. If we gap above the 100s, I think you're going to probably see that at 98.50. It's going to try to at least tack that once. If you go up above 100, maybe 101, we see those numbers get printed early. It's important that this happens early in the session, because early in the session would tell us that we're getting chasers, that chasers are going into this stock and they don't want to miss a rally. Of course, if you didn't want to miss the rally, you needed to be buying it at 85 and 90, not at 100. So those chasers can come in. That will give us the confidence that we need to go in short. So look for a gap on this one. Look for a run up over top of the 100s to go in. Same as EGRX. If we flush, we start gapping down early, I wouldn't short this. I just would not do that. The trade has to line up right for that short to work. I think maybe even if it did that, just like an EGRX, if it was a really big flush, it probably would end up being a buy rather than, not EGRX, excuse me, rare. It would be more of a buy than it would be a short. So a couple of different ways to line these up. Just EGRX, NCLH, rare, RARE, and TSO. A couple of the ones I'm going to be looking for tomorrow. As I always say with these watch lists, you have no idea what's going to happen tomorrow. And that's why it's important to be in the right kind of environment, because there'll be a lot of things being thrown at you. The things that you put on your watch list a lot of times will not manifest the following day, and you're going to have to be able to think on the fly, take the information, and process that and make great decisions. If you're struggling with that, visit thelincolnlist.com, take a 14-day free trial to the live trade room. Other than that, thanks for watching this video. Have a good evening.